Hi, so Charlie giving you Monday's market commentary. I'm actually recording this on Sunday lunchtime. And what I want to run through is I'm going to run through the key US indices, what I am and am not seeing there. But also, just before that, I was on Tip TV last week and I was talking about should trading educators, people like Kim, myself, and Easy Trader, and there's millions of trading educators out there on the interweb, be regulated. Because, as most of you know, probably 80 to 90% of trading educators are not genuine traders, and so they know the theory of what an indicator is and all the other bits and pieces, and they can actually do a really good job of making it sound like they're a trading guru, whereas in actual fact most of them don't trade, or they trade marginally, and they're too busy out there teaching the rest of the time, doing courses and everything else. So don't get me wrong, there are some good guys out there, good genuine trading educators, but there's also a huge amount on the web, and it just makes me giggle actually, where some of them, they tout systems, and they give you a spreadsheet showing you how many pips it's made and all that sort of stuff, and you think, well, there's nothing real there. And so then you come to things like, I put my neck on the line every single Friday, so I can't cheat. I can't get out of it. I can't not put a video out. If I have a bad day and I'm recording my Friday video, I can't put a video out or not put a video out, because people would say, why is Charlie not to put a video out today? Is he hiding something from us? Is he not managed? Is he had a bad day or whatever? So like Friday, for example, how many trades did I take in the video last Friday? I don't know, 5, 6 trades, and to make a measly amount of money. Not a great day's trading. And that's the reality of trading, that you can't always have great days. And yet you see these trading educators who will just randomly put a video out showing them taking a trade, and you think, well, that's random. They could actually have been trying to record a video for days waiting to have a profitable trade in order to then say, all right, I'll now put that one out onto the web and show that I've had a profitable trade. But all the other trades they could have taken could have been unprofitable. The good thing with my Friday ones is that I have to do it every Friday. Unless I say I'm not going to be around on Friday, then you expect to see them, whether they're winners or losers. And that's the reality of trading, is that it's not all about winning trades. It's about how you manage your winners, how you manage your losers, how you manage your risk overall, and how you make your money, but it's more importantly is how you come out of drawdowns when you do have a drawdown period, how you trade out of that as well. And that's the reality of real reality of trading. Just makes me laugh when I see educators touting systems and all of these sorts of things, which make how many pips they made, and if you were trading at £10 a pip, how much you would have made on that. And it's just, and even if they do put a live video out, it's just a random one. You think, well, okay, that was probably, how many attempts did you have to actually find a winning trade in order to do that? It's just not real. Do it regularly. If you want to do live videos, do them regularly. Do it on a set day every week, and we'll see how good you are. That's my little rant about So as a result, when I'm talking about trading educators, I think we should all be regulated. So what I mean by that, I think a good idea would be just, not in a heavy way, but just in a way that if you want to be a trading educator, you have to prove to whoever was going to regulate it at all that you actually are a genuine trader. You have trading accounts which are obviously are traded, and that the regulator can see that, okay, you have a history and you have a track record, and yes, you make money. You don't have to have £1 million in your trading account as a trading educator, but as long as you've got genuine accounts, whereas the regulator can see that you actually make money, and so at least they can actually confirm, yes, this is a genuine trader and they have genuine accounts, and yes, they are profitable. I think that sort of thing would be great for our industry. Unfortunately, I don't think it'll ever happen, but I think that would be good. Anyway, that's my little rant done for now. So let's have a look at these. Now I'm looking at the markets. Let's actually have a look at them, because look at this, the Dow for starters. If I zoom out a little bit, we can see it's it's really not done a lot, has it, this year? I mean, it's had a great run, don't get me wrong, once you start zooming out, fantastic run. But looking at it this year, we've made sort of marginal new highs, very marginal, but a lot of chop here, a lot of chop for most of this year. And so where do we go to from here? And obviously people are calling for the markets to come down, which they could want to go down. Of course they can want to go up or down. What concerns me at the moment from trying to hop on board any potential down move, and it's not to say we couldn't come down, but it's when you look at your intermarket analysis. So if we then, so we're looking at the Dow, and we can see in the last week or so it has started to cool off a bit. It's still within this whole chop zone, so but it is certainly coming down a bit. And but if we come out and look at the S&P 500, that's held up a little bit better. It is coming down, but it's holding up a little bit better than the Dow. Then we go and have a look at the Nasdaq, and then you say, well, it's only really just come off in the last few days. It's really holding up quite well so far. Now, again, it could, if that starts selling off the Nasdaq, then that starts to confirm the Dow and the S&P a bit more. But and also remember, we've got the Russell 2000, which is 2,000 representative stocks within it, smaller cap stocks, admittedly, but they're holding up really quite well at the moment. So when you're looking at the markets, what you want to see is if we're seeing the Dow and the S&P looking a bit weak, what I want to see is the Nasdaq and the likes of the Russell as well. They're not going to be looking exactly the same as these two, but I want to see them showing signs of weakness as well. And they're not showing enough signs of weakness literally just yet. Now, anything could turn, and it could turn on a dime. You know what the markets are like. But this is a small thing that I like to look out for across the markets there. I can see there's some sort of divergent behavior on the Dow itself. Because we've made these marginal new highs, but I'm not getting overly excited just yet about any sort of major sell-off. It's not to say we couldn't, and it starts to build, but at the moment I would like those other indices to play a little bit of catch up and at least show signs of weakness coming through, which they're not doing enough of just yet. So that's the warning sign to those, because the markets very quickly could turn it back around and again and head back up. So we have to be a little bit careful there. But the jobs report was good, obviously, on Friday. And that could, again, I think the market's going to start looking towards the beginnings of the rate hikes in the US. And so if those are indeed going to start, then that could help the stock markets sell off a little bit more, because they won't like the rate hikes, not initially anyway. So, but having said all that, I want a little bit more confirmation on some of those indices. That's the thoughts for this week, and I will be back on Friday doing live trading. I know I'm away Friday afternoon, but in the morning, first thing, live trading as always. See you then.